So hello everybody, good evening, welcome to Officer 247. Today in this particular lecture, we will be talking about unit number 21 of IFS. When we talk about the previous units, we have covered some specifics related to Indian economy. Now from this particular unit till the end, we will specifically targeting the Indian banking system and all those services which are being provided by the Indian banking system. When we talk about this series, that is the target series, it will serve as one-stop solution for all of you who are serious to crack this exam in November 2025. The exam is scheduled in November, that is 2nd of November. And why I am telling you that this will help you, this particular series, because it will give you an initial push. So if you are a beginner, you want to know how to study for this particular exam, and what all topics are relevant, then definitely you must watch all the videos if you have not the previous ones as well. So let's start our class, that is Indian banking structure, unit number 21st. Since it is a class on YouTube, so we won't be covering the entire chapter but only the important ones, and that also starting from the basics. What is the agenda for today's class? We'll be starting off with the history of banking in India, how the banks evolved in our country, what about the regulator of the banks, that is RBI, and what all types of banks are there, be it the scheduled banks, what do we mean by scheduled banks and how they are different from the non-scheduled banks, what is the basic difference between public and private sector banks. All these things we'll be covering today. This part, that is the important legislations, it is not being covered in this lecture. Why? Because the RBI Act along with the Banking Regulation Act will be covered in a separate unit, and that is the most important these are the two most important legislations when we talk about Indian banking structure. So let's begin our discussion with the history of banking in India. Although the history goes way back in 1700s, specifically the Bank of Hindustan in 1770. But when we talk about the core institutional credit, which was started by Imperial Bank of India, from there only you will find the specific importance of Indian banking system growing up till today. So formal banking, it started with the establishment of Bank of Hindustan in 1770. When we talk about the Imperial Bank of India, which was ultimately named as State Bank of India, its, you can say, establishment story is a different one. All those banks which were established by the foreign invaders, they were in the metropolitan cities like Mumbai or Bombay. At that time it was known as Bombay. Then we had one particular bank in Madras. Along with that, one bank was there in Calcutta. These three banks were ultimately merged into one, that is known as the Imperial Bank of India. Now when I talk about the Imperial Bank of India, it not only served as the largest bank of its time, but along with that it has certain regulatory roles. So at that time there was no RBI. So till the RBI was there, your Imperial Bank of India was the regulator, or it was performing the regulatory role for the entire banking structure in India. So the earliest precursor of the present State Bank of India was Bank of Calcutta. In 1806 it was established, the Bank of Calcutta, and later on it was renamed as Bank of Bengal. In 1923 the merger happened between Bank of Calcutta, Bank of Madras and Bank of Bombay, and it was termed as Imperial Bank of India. When I specifically talk about SBI, after independence in 1955, that is 1st July 1955, we have the SBI. So recently State Bank of India celebrated its bank day also, that is 1st of July. So what is important from this particular slide? Bank of Hindustan 1770, Imperial Bank of India was formed by the merger of which all banks, and SBI started its operation from which date? So 1st July 1955. All these things are very important for the examination. Next, when we talk about some more aspects of the history of Indian banking structure, we must know that at the rural level, or you can say, in order to institutionalize the credit disbursement in rural areas, we had a cooperative movement, not only for the rural credit but to in general uplift the lifestyle of the rural people. And this rural cooperative movement or cooperative movement as we know it was pioneered by Sri Vitthal L. Kavthekar. So you must remember the name, it is important. Question can be asked by the IIBF that the cooperative movement was started or pioneered by which of the following. So Vitthal L. Kavthekar, and it started in the state of Baroda. When we talk about the focus was on village credit, and which specific act was enacted thanks to this particular movement? The Act of Cooperative Societies Act 1904. And what was the aim? The core aim was same: cooperation among the agriculturalists, artisans and persons of limited means. Now these persons of limited means, they used to reside in the remote areas, not only in the rural areas but also certain semi-urban areas as well. So when we talk about the rural credit, the birth of rural credit in India was an outcome of the cooperative movement. That is so true. Next, the major banks in our country, what year was there for all these banks, the establishment year? You will find certain banks like Allahabad Bank, then you have these only Allahabad Bank is there in this particular picture, which was ultimately merged with another bank. But yes, it was one of the old bank that was established in 1865. PNB in 1894, BOI, that is Bank of India, and Canara Bank in 1906. 1908 we had Bank of Baroda. In 1911 we have the Central Bank of India. Being a banker, you must know the establishment year of these banks if you are a part of these financial institutions. When we talk about the regulator, that is the RBI. So it started its operation from 1935 only. But what led to the foundation of this regulator? It was Hilton Young Commission. So it recommended the establishment of banking regulator, which was known as RBI, Reserve Bank of India. It was nationalized in 1948, although started its operation as a regulator in 1935, but post independence we nationalized it in 1948. And after that we had one nationalization of SBI in 1955. The Imperial Bank of India was transformed into a nationalized bank, which became the first nationalized bank of our country, and that is the Independent India in 1955. In 1956, you will find a reference of more than 200 private insurance companies being merged together and known as the LIC. So these three landmark events happened within a time span of 7 to 8 years. The government also nationalized 14 private banks, and when we talk about, there were two phases of nationalization, one in 1969 and the another one in 1980. What you have to remember from these, you can say cycles or phases of nationalization of banks, two things. First, how many banks were nationalized in both the phases? 14 in the first phase, and in the second phase 6 were nationalized. Second thing is, what about the deposits? Was there any criteria pertaining to the deposits? So answer is yes. In the first phase, all those banks with deposits over 50 crores were nationalized, and in the second phase with 200 crores they were nationalized. RBI also launched one lead bank scheme. Ultimately, right now we know it thoroughly, because being a banker, you must be having some messages from the lead bank manager, and they will be trying to push you towards implementing all the government schemes. But it was obviously started by the regulator in 1969. The lead bank for each district was responsible that time for the credit needs, and still in 2025 also it is performing the same function. When I talk about one more important financial institution in our country, that is the RRB, the Regional Rural Banks. They were established via one act. which was passed in the parliament in 1974, and ultimately regional rural banks started their operation. As a part of liberalization and the recommendation of Narsimham Committee, private banks also entered after the economic reforms in 1991. And thanks to this LPG reform, we had the entrance of major private banks like ICICI Bank in 1994. Then we have the entry of HDFC Bank and so on. The licensing of the banks, they were also once again opened up. Now the private banks imbibed the competition within the Indian banking system, and it led to the great amount of, you can say, restructuring in the balance sheet for public sector banks as well. When we talk about the recent institutionalization or reshuffling of our banking structure, so IDFC and Bandhan Financial Services, they were given license to set up the universal banks. Along with that, differentiated banks. What is a differentiated bank? Which has a specific role to perform. Not everything which is being performed by the commercial banks normally, but some specific role is given. Like in the payments bank, they are to provide the payments. That is the deposit. No credit will be disbursed. Likewise, in the local area banks, the local credit will be ensured. Along with that, small finance banks also, which perform a specific role to provide the rural credit for the weaker sections. So when we talk about the timeline, it was in 2015 when the differentiated banks were also established, that is payment bank and small finance banks. One thing which you must keep in mind, that not only the cooperatives or for that matter your RRBs, but the PSL guidelines also are very important for the restructuring of rural credit. And RBI along with Government of India, they have identified certain sectors, namely 9 sectors are there right now in our country, which are categorized as the priority sector lending sectors. If you have not watched the video of unit number 4th, which we have covered the PSL norms, it is highly recommended to revisit once if you have, and if you have not, then revisit it again. So now let's move on to the types of banks. As in the initial lecture, we were telling that we have 4 types of banks majorly: scheduled, non-scheduled, private and public sector banks. When I talk about the scheduled banks and non-scheduled banks, what is the difference? Scheduled banks are those banks which are mentioned in the RBI Act, and in which schedule? In Schedule 2. Non-scheduled banks, some examples in front of you: Andaman and Nicobar State Cooperative, Manipur State Cooperative Bank and Sikkim State Cooperative Bank. All these 3 are the example of non-scheduled banks. The scheduled banks include in the second schedule of the RBI Act 1934. When I talk about the paid up capital, is there any limit to these scheduled commercial to these scheduled banks? Commercial banks will be looking into the next discussion, but right now let's focus on the scheduled banks. So in terms of the RBI Act, the bank's paid up capital and the raised funds must be at least how much? Rupees 5 lakh. That you must remember. Question has been asked once, that what about the paid up capital? So the answer was 5 lakh. Eligible to borrow from the RBI at bank rate and obtain membership in the clearing houses. The clearing houses, the CCIL, which we covered in unit number 17th, the monetary policy. They must meet the reserve requirements also, the scheduled banks, which is to maintain the CRR with the RBI and to maintain SLR on their own. Further divided into scheduled commercial banks and scheduled cooperative banks. So normally we talk about these, that is scheduled commercial banks, in our discussion, which are in total 6. Starting off with the various normal banks, like your nationalized banks, you have the private banks, then public sector banks are there. Along with that, we also have a specific category for the foreign banks. And these foreign banks, what functions do they perform? Again, I would redirect your attention towards the unit number 4th. There, specifically the RBI master guidelines we have discussed, and for the various foreign banks in accordance with their number of branches. In terms of ownership and function, commercial banks can be classified into 6 categories. We'll be looking into that also. Public sector banks have the largest share of business as well as branches right now. So when we talk about the profitability and everything, you must refer to the RBI circular, which was just now published in I think 1st of July only or 30th of June. It was there. A report was published by the RBI, and it contains everything which you need to know, the points of difference between the private and the public sector banks. So the 6 banks in under the scheduled banks, the scheduled commercial banks, they are public sector, private sector, foreign labs, that is the local area bank, RRBs, payment bank, and your small finance banks. In total, you will find them as 7. Why? Because small finance banks have been added later on. Cooperatives, they are 6, they are 3: state cooperative, and then we have the urban cooperative. Along with that, we also have the district cooperative bank. So DCBs, they are the most important in the cooperative bank structure. If you have to pinpoint towards one particular category which has immense potential and which has already helped disbursing the credit requirements of the backward area people, then yes, it has done very good work here. Now let's move on to the merger. From here, one question is expected every year. IIBF asks one question based on the merger of banks, and it is very simple. Being a banker, you must be knowing most of these mergers, but let's revise it for all of you. Starting off with the merger between Dena and Vijay Bank. So Dena Bank, Vijay Bank merged into Bank of Baroda. Oriental Bank of Commerce and United Bank of India merged into your Punjab National Bank, that is PNB. Andhra Bank and Corporation Bank, they were merged into Union Bank of India. And when we talk about the Syndicate Bank, it was merged with the Canara Bank, and Allahabad Bank merged into Indian Bank. So one question is expected this time also. So do make sure after the lecture you note down all these mergers in one note and keep on revising them if you do not know. Now let's see some important points, some important factoids about the public sector banks. Why only public sector banks? Because they form the largest chunk of business activities in our country. So they comprise of SBI, along with that 11 nationalized banks. So SBI, right now we see it as one bank. Earlier it had subsidiaries also. Nationalization of banks held in 69 and 80. When we talk about total nationalized banks, they were 27. Right now we have 11 plus 1 only. However, when we talk about new Bank of India 1993, this question can also be asked that in 1993 which bank was merged with the PNB. So the correct answer will be New Bank of India. There were no mergers till 2008, and after 2008 till 2017 there were spree of mergers, including the merger of 7 subsidiaries of SBI into the parent bank. So in 2008 the State Bank of Saurashtra and Indore were merged, and the remaining 5, that is your State Bank of Hyderabad, Patiala, Travancore, Mysore, and Bikaner and Jaipur were merged in 2017. The public sector banks have a number of offices in the overseas as well. So all these important points you must know while studying for the unit number 21. Okay, so this was it for the discussion. Now let's solve some questions based on these. The first question in front of you: the government nationalized 14 private banks with the deposits over 50 crores on 19 July 1969. That is, we are talking about the first phase of nationalization. And 6 more with deposits exceeding dash on 16th April 1980. So what will be the right answer for the second phase? Second phase was for the 200 crore. All those banks exceeding this amount of 200 crore, they were nationalized. And how many banks were they? There were 6 banks. So correct answer is option B. Next, dash was taken over by the PNB in 1993. Just now we have discussed that New Bank of India was the right answer. So A will be the correct answer. Okay, so for all of you who have enjoyed this lecture, I would highly recommend that cover this particular chapter on your own, the remaining portions. Why? Because it is one of the important chapter. If you already have the book, IIBF Macmillan book, and you have read it but not able to comprehend what is important, what is not, what to leave, what to revise, how we should carry forward so that we can excel in November exam. So we here at Officer Data 247 are with you. We have launched a success batch so that you can have the online live classes, you can have the recorded format of those classes, you will be provided with the PDF of the lectures also. Along with that, notes will be there in the form of ebooks, plus quality mock tests are also there. So in all, you can say one-stop solution is being provided via this success batch. So on the website, do visit this particular batch and enroll using the coupon code Y1003. We will meet in the next session with unit number 22. Till then, goodbye, take care.